The challenge was huge. India's banking sector had never been in a more dubious situation than ever, and the year was 2014. However, fast forward 7 years, and through sheer willpower and administrative reforms, the Modi government has forced even a partisan credit agency like Moody's to improve India's banking sector outlook from negative to stable. Cleaning up the banking system, the balance sheets by accounting for the NPAs etc. has led to the massive upgrade, and this economic recovery is expected to drive credit growth. Hi and welcome. You're watching TFI English, the national socio-political analysis arm of the TFI Media Group. I'm your host Tribhuvan, and in this video I will tell you how PM Modi stabilized an NPA-ridden Indian banking system. Before you start watching this video, you must have seen me wear these amazing t-shirts with Sanskrit quotes and Indian heroes. And the great news is that you can get them too. Just visit tfistore.com and pick your favorite from a bunch of options. Global credit rating agency Moody's has finally got rid of its blinkers and revised the outlook for the Indian banking sector to stable from negative. The report stated that the quality of corporate loans has improved, indicating that banks have recognized and provisionized for all legacy problem loans in the segment. Moreover, in the report titled Banking System Outlook India, Stabilizing Asset Quality and Improved Capital Drive Outlook Changed to Stable, the agency remarked that negative factors associated with the bank had receded. The report read, the pickup in economy activity will drive credit growth, which we expect to be 10 to 13% annually. Weak corporate financials and funding constraints at finance companies have been key negative factors for banks, but these risks have receded. It further added, we have revised the outlook for the Indian banking system to stable from negative. The deterioration of asset quality since the onset of the coronavirus pandemic has been moderate, and an improving operating environment will support asset quality. Declining credit costs as a result of improving asset quality will lead to improvements in profitability. Reportedly, the agency believes that aided by a stable banking sector, India's economy will continue to recover miraculously in the next 12 to 18 months, with GDP growing 9.3% in the fiscal year ending March 2022 and 7.9% in the following year. The Indian banking system was a mess when the Moody government took charge. Despite the best efforts of the government, the banking sector in the country, dominated by the public sector banks, also known as PSBs, improved a little. To solve the expanding problems of the NPAs, also known as non-performing assets, a legacy generously passed on by the previous UPA regimes, the Modi government, in close consultations with the RBI, brought the Insolvency and Bankruptcy Code 2016. The measure was a huge success in solving corporate bankruptcy in India. The reason behind this dim performance of the Indian banking sector is the domination of public sector banks, which account for around 70% of the country's banking industry. It has been almost 5 decades since Indira Gandhi nationalized banking in 1969, intending to improve lending in strategic areas. However, since then, the banking story of the country has only been in a downward spiral. The main reason for NPA accumulation is non-payment by the bank's clients. In simpler terms, it is like a shopkeeper giving a customer some goods on credit and the customer is not able to pay back to the shopkeeper. Most of the non-performing assets in India are loans by government banks because the management of these banks gives loan to companies without checking the viability of the project or ability of the client to pay back. However, as Moody's stated, the problem has now been taken care of by the effective government of PM Modi. Before the Modi government came to power in 2014, the total NPAs stood around 52 lakh crore. The simplified process under the IBC has reduced NPAs to 8.34 lakh crores by March to 31 NPAs this year. Insolvency proceedings normally used to take around 4.3 years on an average in India, which is way slower than 1 year in the United Kingdom and 1.5 years in the USA. The IBC has not just reduced this period, but also made India a friendlier destination for companies looking to invest in the country. Reportedly last month, thanks to IBC, the lenders of Dewan Housing Finance Corporation Limited, also known as DHFL, announced that it was about to receive the first installment of their dues. The total amount recovered in the first phase will be Rs 37,400 crores. With the public banks putting tremendous pressure on the exchequers, the government is even planning to privatize a few of them, starting with the IDBI Bank. Recently, RBI announced that it will be creating a new security clearance framework for screening potential bidder for PSBs. The process would be different from the privatization of any other PSUs, as more restrictions and measures will be embedded in the process. As reported by TFI earlier this year, Union Finance Minister Nirmala Sitharaman in her Union Budget speech had announced that the centre government would reduce its stake in 2 public sector banks apart from IDBI Bank. The Business Standard report states that the Central Bank of India and IOB may be privatized. A high-level panel headed by Cabinet Secretary Rajiv Gauba had recommended the names after Niti Aayog identified suitable candidates for the privatization process. Moreover, to expedite the process, the government is mulling granting voluntary retirement schemes, also known as VRS, to the employees of the said banks. It will help the government to get rid of extra flab, making the banks leaner and trimmer, ready for instant takeover by the private sector. Moreover, it would create vacancies which could be filled by the youth of the country, thereby generating employment. Even after a devastating second wave of the pandemic, the Moody government managed to wade through the testing waters and is now reaping the rewards for it. The banks are in better health, and the best part is that there is still a whole lot of room left for the government to bring its sweeping reforms.